All right, thanks very much, Matt. It seems like everywhere the government goes, bad things happen. Let's bring in our market experts this evening on a rough night. Zachary Carabell, River Twice Investment Research, CNBC contributor Michael Farr with Farr Miller in Washington, Peter Schiff, Euro Pacific Capital, and author of the Little Book of Bull Moves in Bear Markets, and Michael Cugino, the Permanent Portfolio family of funds, where he manages the 5-star rated Permanent Portfolio Fund. Good evening, gentlemen. Zachary, let me begin with you. Disappointment about no China stimulus package, lack of profits and profits visibility, what seems to be anti-business, anti-entrepreneurial policies coming out of Washington. Why did stocks crater today, Zachary?
Yeah, I mean, I probably disagree with you on those last one, but, I used to think, like many, that you'd see a market recovery ahead of an economic recovery, that the market would be a leading indicator and start pricing in, some growth returning. I think at this point, the financial world, which includes obviously trading, is so completely cratered in its confidence, and its assumptions and models have proven to be so wrong that really looking to the stock market as an indicator of an upturn in this economic climate is probably a mistake now. And, today you actually had data coming out, the personal incomes were up, that people's ability to buy more with their dollar has gone up. I mean, the fear of job loss is obviously severe.
5 straight months, Zachary. 5 straight months after tax, after inflation, income has gone up,
right,
in large measure because of the collapse of energy and inflation. That's one of my mustard seeds that I hope will grow into recovery. Unfortunately, I'm getting smacked by the side of the head every night.
But I think the point here is that to look to the equity markets right now for signs of improvement is, I think, a mistake, because I think the equity markets, I mean, if it were an individual, it would be either on medication or treated as not worth listening to because it was so addled.
Peter Schiff, let me go to you. I just don't understand. We've had TALF, we have TARP, super TARP now, public-private TARP to buy toxic assets. We've had a mortgage bailout plan in great detail in the last 48 hours. And guess what? Consumer finance companies that might have benefited from TALF down 12% today, Peter. Banks that are supposed to benefit from all this down 12% today, Peter. We had some lousy mortgage default and foreclosure numbers. The business CapEx numbers were very poor. Peter, what might, I know you're a bear, but what would change your mind? Is there something out there that would trigger at least one of your little bull markets in a long bear cycle, according to your book?
The government's going to have to stop trying to help. I mean, you're making the connection.
Amen.
Every time the government does something, they make the situation worse.
It would seem so.
Barack Obama is saying that he's doing things differently from George Bush. He's doing the same thing. Remember, when Bush came to office, he inherited a recession and a bursted stock market bubble, and he tried to artificially stimulate the economy with deficit spending and cheap money. And Barack Obama is doing the exact same thing, only he's inherited a much bigger problem, so he's not even going to get a short-term boost out of his stimulus. He's just going to make the situation worse immediately.
But, Peter, guess what? One of the little mustard seeds here is the U.S. dollar. Now, I know you're a long-term dollar bear, but the dollar has been great. Almost for a year, it's up 25%. The dollar was up again today. Isn't that a good signal for something in this mix?
Well, I think certainly the fact that the dollar has risen from its historic lows 8 months ago, that's why the crisis isn't even worse. I mean, imagine what would be happening in this country if the dollar wasn't rising, if prices were rising, if interest rates were rising. All that would be happening if foreigners weren't pouring their money into our bonds. But I don't think that's permanent. I think that money is going to leave even more quickly than it came. And that's why I think the real crisis is in front of us when this thing turns into a currency crisis.
Michael Cugino, welcome back. Look, you got some very prominent names. They're not so prominent in terms of market capitalization anymore, but it all seemed to dominate market attitudes and demoralization today. General Motors, Citi, General Electric. Give me a thought on this as a veteran and successful stock picker. What is going on? Some of America's greatest companies seem to be going down the chute. I hate like hell to put GE in that, but right now there's a bear raid going on General Electric, whether that is merited or not, Michael Cugino. Where can one go here? Where can one look?
Well, it's a combination of factors, Larry. I think you have declining earnings, a recessionary environment. questions about asset quality on the balance sheets, and a very large uncertainty. I mean, a couple of the other guests have already mentioned it in terms of confidence in public policy and confidence in enacting the right programs to get us out of this robustly. And I think until that confidence comes back, we're going to see sort of a lack of interest, if you will, for nothing better than in stocks right now. People just are not that interested in buying them.
Michael, aren't stocks traditionally, I know Zachary says stocks are going to lag this time, but traditionally, don't you see confidence in business returning first through the prism of a rising stock market?
Well, I do, Larry. I think the economy at some point in time will improve despite the fiscal programs we've enacted. But I think the issue is, look at GE. We were talking about it last week. It was around...